Hi, welcome to CIO Series number 31. My name is Chi Wong, CIO of Private Wealth Management at UOB Hian. This is our first CIO Series for 2026, what we like to call the year of the wild horse, if you've been following our research to show how uncertain this year can be. Um, in fact, Chinese New Year hasn't really started yet. The horse year hasn't started, but already many of our 2026 predictions are already coming true. It's not just showing that we are right, but also showing that how quickly things are changing these days with uh, the world events, how fast things are evolving. Um, And so with that, we had the pleasure to have Suan Teck Kin, head of research and chief economist at UOB with us to help us review our top predictions for 2026 as things are being evolved. Welcome, Teck Kin. Thanks again for joining us.
Thank you. Thanks, Wang Chi. Good evening, and thanks for having me here again as a guest for your show.
Okay, next page, please. I cannot run the slide. Ooh. How do I run the slide? Oh, here. Okay. Okay. This event does offer translation into the translation of subtitles into any language you like. So feel free to use this feature if you like to view it in a different language. And before I begin, I just want to share with you all that starting 2026, UOB Hian will be offering a full suite of our research in English and Chinese for our private wealth clients. And these include, but not limited to, our signature Wealth Flash Report, our Wealth Daily, our US and China Biweekly, the Fixed Income Monthly, and also the Wealth Monthly. So if you're interested in viewing any of these reports in Chinese, please contact this email address here or call your UOB Hian representative. And like I said, today we are going to review our predictions for 2026. For this set of predictions, I have already shared with you in our December CIO series number 30. And the replay of that event is on our Wealth Vision YouTube channel here. Feel free to click to view it if you like. Just a quick recap of what we expect in 2026. Number one is a potential slowdown in US AI capex with implications to the AI industry as well as the US GDP, what we call the Great AI Cool Down. Number two is on China. We continue to believe that China faces growth challenges, especially in real estate and consumption, and the market upside may be capped by the lack of macro improvement at the real economy level. Number three is on the US-China relations, and the topic essentially boils down to US-China AI rivalry. So think about how the US-China competition has evolved over the years, and now perhaps the most important topic is really the US-China AI arms race. Number four on our radar screen is the Fed Wildcard. Unlike most investors out there, we are actually pretty cautious heading to 2026 about the Fed uncertainty, the bunch of uncertainties regarding who's going to be the next Fed chairman, is he going to maintain his independence, and what is the macro picture, and whether there be how many rate cuts be there this year. All these are big questions that are yet to be answered. And last not the least, and this is a topic that I'll introduce our guest with, we call the breaking the dollar's grip. Essentially is talk about de-dollarization, a topic that Teck Kin has kindly introduced to us as early as May 2025. And we have been absolutely right on with that topic. And again, very honored to have him back to give us an update on that. Before I turn over to him, just want to show you a number of our calls to actions this year and late last year, given that we are taking a more cautious stance on markets, whether it's the US stock market or the fixed income market. We've also placed our bond call recommendation under review because of this Fed wildcard or Fed uncertainty. Okay, without further ado, let me introduce Suan Teck Kin. He is the Chief Economist and Head of Research for UOB Bank, responsible for macroeconomic and foreign exchange research with a focus on China, Hong Kong, Taiwan, and all the major Asian markets. He's been decades of experience in macroeconomic research and equity analysis. Thank you, Teck Kin. Thanks for joining us.
Thank you. Thanks, Wang Qi, for having me here. Really an honor.
And I'll let you share your slide.
All right, sure.
Like,
Okay.
when we are teeing up for that. So I have a number of questions prepared, and later we're going to open the floor for the audience to putting forward some questions. The first thing on my mind is really about tariffs. I know the markets don't care right now, and in fact, since April 2025, almost all markets have traded up to record highs, as if tariffs don't matter, as if tariffs are positive for the economy. I understand you have a different view, so please take from here. What's your thinking on that?
So for tariffs, I actually did not prepare a tariffs chart this year because it's no longer, it is not so much of a concern right now. It's not at the top of the mind because we have a lot more things to be worrying about. In fact, if you look at the performance, the reason why it's not really at the top of the mind at this point for many governments or even at a company's level, I think because if you look at the red bars here, look at all these red bars. These are the GDP growth of 2025. 2025, you see the red bars. Most of the economies in Southeast Asia, I'm only looking at Southeast Asia and also China. Most of the red bars are actually doing quite well, and in fact, most of them had done much better than we expected. For example, in Singapore, we only expected the start of the year last year, 2025. Maybe at 1 to 3%, and it turned out at 4.8%. And when this is early estimate, when the final estimates are out, it should be closer to 5%. It is really incredible.
It is.
Yeah, it's really incredible. 5% for Singapore, we have not seen that for a long time, right? And if you look at Vietnam, Vietnam is one of the so-called beneficiaries of these great supply chain shifts since 2018. When Trump 1.0 started his trade war against China. If you remember, is a really long time ago, but that was how it started, right? Trump 1.0, he came into power 2017, 2018. He started this tariff war tariff on China, and the supply chain shifts have mostly moved to Southeast Asia, particularly Vietnam as one of them. So if you look at Vietnam, 8% growth. When the tariff came in April last year, I downgraded all the way to about 6.5%, and I was prepared to downgrade even further, depending on how bad things got. But then it turned out that it's so much stronger that even compared to 2024, 2024 was just about 7%. So what happens here? What happened here? Why tariff is not at the top of mind? That's because a couple of things. Last year we had these front loading of exports, right? Companies and placing orders, for example, ahead of a tariff, and then when tariff was announced, Trump actually taco, remember that? Taco, right? And they said, oh, it's only 10%, it's not 30% or 20 whatever percent. Everybody else 10%. So we had a lot more orders for all these countries and companies, right? In all these countries. Then the other factor that is related to what you put out your 5 predictions just now about AI. So a lot of these orders are also related to AI. You know, all these
Yeah.
AI investments on data centers, on infrastructure, even on the power system, electrical grids and all, electrical systems and grids and all that, also had an impact, positive impact on a company's performance, exporters' performance. So we have basically two factors. One, tariff. People got used to it, and there was some arrangement by company. And second thing, of course, the AI tailwinds. For example, you know, look at the memory prices have gone up so significantly, right? So this is a positive effect of the AI investment that carried most of these carry many of these companies, and also as a result, GDP growth has done pretty well in
Yeah.
2025 and hopefully 2026 as well.
So
Wang Qi.
do you expect the same two factors to stay in force in 2026?
All
Have
right.
positive effect on the
Mm.
economy, global economy or Asian
Okay.
economy?
Okay, so tariff, although I said just now, it's not at the top of mind, it is still on people's mind, right? I mean, because it can come back and bite us. Some of these things are kind of like surfacing. For example, recently, Trump threatened tariffs on European countries. Remember, 10%, right, for Greenland. So if you don't go along, I'm going to slap you, I think, 10% and then 25% in a few months later. So tariff is still matters, but relatively speaking, I think companies are kind of like getting used to it, and they are making adjustments to their production processes, and also maybe working with the importers on the US side to kind of share a bit of the tariff burden. And the other thing is that companies also look at alternative markets rather than non-US markets to ensure that they are not being threatened by tariff again or held hostage by tariff again. So these factors are still there. So we shouldn't deny that. But I think companies are adjusting to it, right? And this AI, now AI so far seems to be still on a positive run. We get export orders coming in very strongly in even in December for some of the companies or some of the countries, right? Rather, for example, in Malaysia, some of the places like Taiwan, showing very strong performance in their exports. So that means the AI demand is still driving it. It could continue on for a bit, but we want to watch. So as a result, if you look at our blue bars here, our expectations for next year, for this year, 2026, we have scaled down a bit, but not dramatically. Although for Singapore, for example, it is scaled down quite a bit, but it's still quite decent numbers that we are seeing, right? So yeah, some moderation. We should expect some moderation. We're not going to see a repeat, but it is not at the point that we should, start to worry at this point yet.
Got it. So you don't see tariff or the AI capex slowdown or you don't see that as a risk. And in fact, you're right, because overnight we got earnings news from Meta and Microsoft, both pointing to higher than expected capex guidance for 2026. So I will call about a slowdown might be too early. And then just to echo your point about the significance of Asia in the entire AI supply chain. While you were talking, I thought about TSMC and Hynix. I think these two companies alone account such a big part of the semiconductor supply chain for AI, whether it's NVIDIA GPUs or high bandwidth memories. So I can kind of see why last year we missed this upside in Asian economy from the AI boom. We always thought it's going to benefit the U.S., but in fact, it also benefited a great deal to the Asian supply chain.
The other one related to, sorry, Wang Qi, if you don't
Go ahead.
mind. related to what you mentioned about Hynix and TSMC and all those Taiwan and South Korea. Another center that is of interest is actually Malaysia. Malaysia E&E exports is a big part of it, and many of these are like Intel and TSMC. Not so much of TSMC, but Intel and some of these supply chain of the E&E, electronics and electrical industry, actually have a big presence in Malaysia. Look at Malaysia's ringgit performance in these past few months. It really on the tear. The ringgit performance has been very strong against the US dollar. Partly also reflects the optimism about the industry itself, the supply chain, part of supply chain, and also data center investments and all other things related to AI for Malaysia.
Yeah, I can totally concur to that. I went to Malaysia 4 times last year, I think, four or 5 times, and every time I go, I see. And one of our favorite stocks, Broadcom, which is a leader in AI ASIC, also has a very strong Malaysian Chinese background. So well, maybe because the early days, Malaysia was closely related to the Intel supply chain, that type of things.
That's right.
Very interesting.
Absolutely.
Yeah, so definitely it's time for us to reevaluate our AI capex. We're still early in 2026, so maybe we should keep an active watch on the guidance for the global AI spending. Let's just switch gear a bit on geopolitics. I know that this has been such a hot topic in 2026 of a bunch of unexpected events happening so quickly. With President Trump and with the Middle East and also Venezuela, Russia, Ukraine. So help us to understand from an economic standpoint or from an investment standpoint, what investors should be watching going forward. I know it could be very complicated, and neither of us are geopolitical experts, but now we're in a position that we really are forced to watch these things and adjust our strategy as things are developing.
Right. So if you look at, like you said, Wang Qi, we are not geopolitical experts or analysts even, but of course there are implications on certain areas of the financial sector, of the financial market. So certain areas. What are these areas? I think for companies, right? If you look at all this AI, etc., probably not much impact on those. Right? So they run on their own momentum. Whether they can monetize whatever that they invest in, whether they, in terms of leverage and all those. So I'm more looking at possibly different areas. One is you talk about de-dollarization, right?
Yes.
I think that one probably will have a lot more implications, geopolitical events or developments on that angle, that direction. Right, a bit of a de-dollarization trend is still there. Maybe I'll switch to that part quickly, just to show you what I had here. In a way, like what you mentioned just now, President Trump had been very busy and keeping us busy as well. Early part of the year, right?
The dollar dropped a lot.
Yes, the dollar has
just
been
recently,
under a lot of pressure, right? Under a lot of pressure. So basically, that's what. Exactly. So the America First and all this disregard for international rules and laws actually have an impact on the trust and confidence and also credibility of the U.S. system, financial, which is represented by U.S. dollar as one of the pillars of the American power. Right? If you look at the American power, there are 4 pillars roughly, just to make it simple. One is the soft power, movies, culture, and respect for rule
Disney,
of law.
Netflix,
Netflix
Studios.
and all those things, right? Mickey Mouse, Disneyland. This is soft power. The hard power, of course, is your military power, right? And tech power, AI, etc., etc. Innovation, ability to innovate, and of course, the other one that is more related to us is the US dollar. Now, all these things, if the more the US government messes around with rules and laws and stuff like that, disregarding them, this one will be kind of like, will be affected, the soft power. And then the hard power is still there, it's still the strongest, 500 over military bases still there. But the dollar will manifest itself, right, as as a problem with these pillars of power. Now, of course, this America first in action is now in action with Venezuela and then Greenland. And this, if you look at this Donroe doctrine, it is very interesting. It's actually in 2025, last year, in the New York Post, not this year. You know, it's actually it came out in 2025. A newspaper called it Donroe Doctrine, right? It's kind of a play on the word Monroe Doctrine. And what Trump has done so far, early this year already, is of course Venezuela and Greenland now, and Canada is now a bit worried. When is my turn? If Greenland is gone, you know, it's going to be my turn, right? So there's all these effect on countries, and also the disregard for rules of laws make people worry, you know, because if you look at Venezuela and the U.S. government, the White House actually issued an executive order on the 9th of January. It's about so-called safeguarding Venezuela revenue for the good of the American people, and by the way, Venezuela people too. You see, in that document, if you take a look at the document, basically what the U.S. government has done in this case here is nationalize all the resources, right, under American control, and all the contracts and debts owed by Venezuela before the American took action now will have no access to future revenue. Meaning, if you have a debt, you are creditor to Venezuela before the U.S. government came in, now you are too bad. There's no access at all for all the resources down there. So what does that mean? What does that mean? So that means for people, for companies, when they do business right now, they have to worry about, if the US can do it, another country might do that for me, to me too. Right? There is a risk that other countries can do that to me. So then that means that you have to start to think about, how do I diversify my risk? Should I still use dollar? Because if the dollar is still being used, it is still in use, and the US can also make it as a weapon, as it has done before, to make my life miserable, right? Because if there's no access, meaning that rules and contracts, if they don't matter, you have to resort to political negotiation. There's no more litigation, because if you look at the document, all the money that is under control by the US government, whatever resources, will be immune to litigation. Will not be subject to court order. And that's how scary it is. If you have exposure like China, probably owe about 10, 20, 12 billion, at this point, there's no recourse to a certain extent, right? So
it kind of happened to Russia already, right?
Yes, it happened to Russia already. Exactly.
So that's kind of the worst nightmare for every other country dealing with the US.
Correct. So
or having US dollar exposure or US dollar assets.
Exactly. So that's the reason why, if you look at the way gold is behaving, the way silver is behaving, crude oil prices are behaving. So you kind of sense that people think that, okay, dollar will still be with us. Okay, there's no question about it. But at the margin, what should I do? Right at the margin, you know, any extra stuff. Should I continue to be heavy on dollar? So that's the reason why this safe haven flows are happening, right? Maybe to a certain extent, Hong Kong as well is also receiving that kind of safe haven flows into Hong Kong markets. Singapore.
Let me stop you for a second. So you do expect de-dollarization to continue? We actually have gone through a lot of the detail rationale behind de-dollarization, and whatever you just told us now is just the confirmation. I think you're right on. I mean, I'm really amazed, and that whatever you told us, 10 months ago is like unfolding.
Yes.
In front of our eyes.
So, in front of our eyes, right.
Kind of going deeper into what investor could do. You talk about the safe haven currencies,
right?
Other than the dollar. Again, let me just be very clear. Both Teck and I do not expect a U.S. dollar collapse, right?
That's right. We don't.
We do not expect the U.S. dollar to go away.
No.
We do not expect the U.S. debt crisis, like some people will claim and make these sensational claims. But there's an inevitable gradual decline of the dollar,
Right.
And then in this environment, if you actually if you compounded this decline over a long period of time, it's going to be very significant.
Mm-hmm. Yep.
And I'm sure
Yep.
that you're based in Singapore. A lot of our Singapore investors already have a taste of that last year when they bought U.S. dollar bonds and had almost 10% currency depreciation. Okay, long story short, how can we? What are some of the currency we should consider? You talk about a safe haven currency. So let's start with that.
Okay.
Alternative safe haven currencies.
Alternative. If you look at I mean, what some people do, of course, is that if you look at a dollar. What else can I do if I don't hold dollar? I want to hold some other assets. I think Sing dollar is one of them.
Okay.
Singapore dollar is one of the places that Singapore is one of the places that people go to to seek havens. Maybe to a certain extent, I think Malaysia is also in play right now. A bit of that safe haven kind of thing, although it's not absolutely one.
Can we put Malaysia kind of tier 2?
Yeah, in a way, yes, you should consider
right?
that. Yeah, you can consider that,
Okay.
To park your money, and that's what some people have been doing. And maybe if you think about in the European space, that will be Swiss franc or even euro. That is an alternative to the US dollar, because after all, in terms of the structure, right? If you look at the central bank assets, what do they put their money in? Okay, dollar is a big part of it, although the importance has come down. Let me show you if I have a chart. Oh, yes, here. So what do central banks do, right? These are the ultimately, the buck stops here kind of investors.
Yes.
That's the end of the road. What can I do? All right, so dollar is still a big part of many central banks, more than half. But if you look at before 2000, it was 70%. Now it's about half. Right, about half of it.
Yeah.
Now, the other one is euro. So there's still some bits of it. Japanese yen, maybe a bit of it. And also, of course, CNY is emerging as an alternative to many central banks, right? Because of reality, a lot more companies are using CNY to settle their trade, as a form of exchange for goods and services and things like that. So the central banks will end up having to deal with CNY, the Chinese yuan. All right. So that's why they keep it in their reserve. So that is the part that we also want to pay attention, that we should not ignore, especially for Hong Kong. The CNY could be a safe haven currency as well.
Yeah.
All right. So that is something we should think about carefully. So but again, like what Wang Chia, I want to repeat what you say just now. The dollar will still be with us, huh? It does not mean that people will be dumping it fast and furious and get rid of it. No. And also, dollar assets do not mean that it's a bad thing. The dollar assets that, for example, that you mentioned just now, some of these are American companies. They're all dollar based, right? So, but if they are making money, if they have good products and services that they can offer, can make money, hey, why not? It's giving you good returns, etc. So we are not denying that.
Yeah,
right?
definitely. And people even say today that the rising, the super hot U.S. stock market is also a sign of de-dollarization.
Yeah.
Or it's also, you can think of it as prices go up, stock prices go up, but you can also think about companies' value go up relative to the U.S. dollar.
Right.
Because the depreciation. And like I said, fundamentally, a lot of the U.S. companies are indeed global companies. So not all of their revenues are generated in U.S. dollars. So let me just quick recap. So in terms of investor choices,
okay,
right? And I think we're on the same page here. What Teck Kin just said, focus on the winners. Don't focus on the loser. The loser will be the dollar, but the loser will not lose that much. But the winner is going to win a lot. So tier 1 safe haven currencies, would you say that's Singapore dollar and
Singapore dollar is one of them? Yeah.
And Swiss franc?
Swiss franc, some people will use Swiss franc, and the other one is euro.
Euro.
Also,
you,
yes.
You put euro in tier 1, despite the sovereign debt issue. The debt burden. Europe also have faced, maybe not as bad as the U.S. and Japan, but U.S. also have some long-term debt issues here.
Of course, there are long-term debt issue. But if you look at what Europe has been doing lately, First, in response to Trump, right? So they are also
Mm,
taking, in response to the US, they're also taking ways to diversify themselves, right? Free trade with India,
okay.
that's one thing. So that means they have to increase connectivity, increase connection with non-US parties. India is one of them. And then look at the British Prime Minister is in China today. Look at
Yeah.
what the UK is doing. It
Wow.
has to diversify its economy, diversify its risk as well.
Yeah.
So if you put everything on the US, I mean now you'll be getting hit really bad, right? So they all recognize that if they increase their connectivity, there is an escape route for Europe. So I
Makes
would not
sense.
write off Europe at this point,
Okay.
right?
And
I would
then
not write it off. Yeah.
got it. And then tier two will be Malaysia ringgit.
Yeah, Malaysia ringgit, you want to think about Malaysia ringgit, I would even put China maybe at even tier one, for argument's sake.
I see.
For argument's sake,
For
I
its
would put China.
significance,
Yeah,
not
for
necessarily for the volatility, but for its rising or emerging importance in the
correct,
global system.
right.
We're
So if
seeing
you
the same
look,
thing. Yes.
yeah,
They're
if you look at the
rising.
performance of the currency,
Yeah.
it has been appreciating against the US dollar. It just broke the 7 level not too long ago. So I think there is still room if you are thinking long term, right? You want to diversify. Yes, you still have to have US companies in your portfolio for their earnings, for their innovation capabilities, etc. You want to diversify maybe some of the Chinese assets in the Chinese currency. So if your Chinese assets perform well, your Chinese currency also perform well, then you have a double gain on that,
Mm.
in that sense, right? So
I
that
would
is
just
a
caution,
mm,
yeah,
mm,
well, we're right on, right on. We actually, just like you, we've been calling a RMB appreciation for some
mm,
time. Even on
right.
this call, there's some very smart investors asked the question about whether a weakening Chinese economy may weaken the RMB, and we
Mm,
explained that RMB is very much undervalued to begin with. But
that's
I do
right.
want to caution the audience that for RMB, because China still have a real estate
Mm-hmm.
problem
Yep.
onshore, I don't think they will let RMB depreciate that
Mm,
quickly. I think,
agreed.
and that's a potential kind of issue to think about when it comes to
Yes.
the speed of RMB appreciation. And it's actually true. If you look at last year too, when the US dollar index declined in the first half, RMB actually did not really appreciate
Mm-hmm.
much
Yep.
until right much later in the year. And it's so
That's
far
right.
still a very controlled and
Yep.
benign pace of appreciation. And then
Definitely.
Japanese yen, are you
Okay.
worried?
Japanese yen. If you have look, I mean, recently the governments have stepped in. Central banks, the Fed checking rates. Prime Minister, Japanese Prime Minister also voiced out, Finance Minister, and all those.
Mm,
So Japanese yen, even at that stage, right? It was so weak. We were already
yep.
calling that it is abnormal for the yen to behave like this because our chart, the trend shows that it should be appreciating, right? And indeed, after all these checks, it appreciated according to our plan, so to speak, to the levels that we think that is a bit more normal. So we still see some room for appreciation for the Japanese yen, but again, it is not going to be significant.
Mm,
But the appreciation trend, I think, should stay intact, especially if the election is the factor has gone away, right? So I think this should again play the in a way safe haven role for the Japanese yen. But of course, the relationship between Japan and China lately has been a bit problematic. So
mm.
that also diminish is safe haven role a bit as well.
Yeah,
All right.
agree.
All right. Mm,
Okay, so
mm.
a different topic, and this is a difficult one. I know that we can talk probably another hour on it, but we're not going to spend, which is the Fed.
All right.
Okay, I
Sure.
think I've
Okay.
called you before about this topic, and I've
Right.
consulted with you several times on it. So
Okay.
it is very tricky. The way I see it is the macro uncertainty There's the Fed independence issue.
Yeah.
There's the political pressure from Donald Trump, the
Mm-hmm.
Powell criminal investigation. Also
Right.
surprised everybody. I didn't
Right.
expect White House to go that
Yeah.
far with a Fed chairman,
Yes.
but it's happening.
Right.
And now the consensus right now is that a Trump-friendly Fed chairman is good for markets.
Mm-hmm.
More
Mm-hmm.
rate cuts are also good for markets. That's the
Mm-hmm.
consensus. Do you
Okay.
have a different view, or are we too optimistic about how the interest rate will play out in 2026?
Okay. Well, so if you have a rate cut, more rate cut buyers, in a way, it can be positive for market, but it is a double-edged sword, I would say. If you are too aggressive on interest rate cuts, right? If you are too aggressive, for example, let's say the new person
Yeah,
is too aggressive. Now
we'll
we are
cut to
expecting
zero,
only two.
right?
Yeah, we are only expecting two rate cuts this year, 2026. One
Yeah,
in second quarter, most likely in June, another one in third quarter. Because if you look at last night's or this morning rather, the Fed's FOMC statement, the picture is actually quite positive, right? In a way, you have the growth and also labor market seems to be okay. Inflation seems to be trending down, especially on the services part, according to Powell, right? So if you are that kind of environment that does not need help from the central bank to cut interest rates, right? To help. And if you were to go ahead and do that, like this year, cut all the way to zero during 2020, and we all know what happened at the time. It was COVID, and the central bank all over the world, went to the extreme, cut interest rate to super low.
yeah,
But we know the consequences after that. The
sure.
consequences
Well,
after that was
mm,
inflation problem, right?
yeah,
All over the world.
2022.
That's right. All over
Yeah,
the world, inflation problem. So you have to
Nvidia
take
down
into manage.
50%.
Yeah. So that means now, fast forward to, let's say, May, the new Fed chair comes in and say, okay, let's go and cut to zero. You can imagine down the road, inflation problem is going to be cropping up.
Yeah,
Okay, and it could very well be still under within Trump's term, because Trump's term will have another 3 more years to go, right?
yeah,
Inflation flare up, what would be the consequences? One, if the Fed were to go ahead and do these kind of rate cuts without consideration for data and reality, the impact will be on the US dollar.
mm,
And the independence is called into question, credibility of the Fed is called into question. All the more people will kind of like move away from the US dollar or step back. And that would accelerate your de-dollarization or debasement talk. Then second thing is even more concerning is, if inflation comes out, what would happen to your bond yields? And your bond
yeah,
yields would have to respond, right? If your nominal,
sure.
if the inflation, and your
Long-term
nominal
bond
yield,
yields, right?
yeah, long-term bond yields, your interest rate is cut to zero. The next thing people will think about is your inflation, and then long-term bond yield would shoot up. Right now, the 10-year US Treasury is already hovering around 4%, 4.2% or so. It hasn't come down meaningfully.
No, very
Now that
sticky. Yeah,
Right now, then that will be problematic for Trump,
yeah.
where he's going to spend a lot of money in defense and all the servicing, and then you are going to get a lot of ugly consequences, right?
So too aggressive cuts not necessarily good. And then
That's right.
would there be a scenario when the market also start to pricing? I'm by observing the market, I realized that you just said earlier about the duality of the Fed rate cuts is not
Mm.
always one-way street, one-way positive. Is there a possible scenario where the market start to extrapolate? The economy must be breaking apart or
Mm.
collapsing when the
Right,
Fed is cutting to zero.
right. So
Is
that
that
could
also
be,
a potential risk?
yeah, that's a potential risk. So if the Fed is cutting interest rate when there is not needed, everybody must be thinking, do they know
Yeah,
something that we don't know?
exactly. And not just inflation, but also
Right.
about the growth, right?
Yes.
Is under question.
Right.
Yeah.
So
So
is
the
this
new
are they
Fed
seeing?
chairman need to be
Mm,
very careful
that's right.
how they manage these cuts in 2026.
Absolutely. Absolutely. So the market must be guessing, are they seeing something that we are not seeing? Right?
Yeah.
What's going on here? When all the data showing up, like for example, labor market seems to be okay. Yes, yes, weakened a bit, but it has not weakened to the extent that people are cutting back spending, and all those things, right? Stock market
Yeah.
is doing good, and companies are producing, companies are making profits. So you are cutting interest rate to zero, and why is that the case, or very low? Why is that the case, right? So
Yeah.
that could itself generate panic when it's not needed at all.
And on the Fed independence, I see two different views. One view is, like you said, traditionally Fed is independent.
Right?
And when the Fed loses independence, when the new
Mm,
Fed chairman becomes a pawn for President Trump, it's not good. But on the other
mm,
hand, there's also a view, and so far the market is trading as if, once the Fed chairman conforms to Trump, it's a good thing. What do
mhm.
you think?
Well, I think we have to, because right now it's so uncertain. There are four candidates, right? So you have one maybe political ally of Trump, Kevin Hassett, and then there are two candidates, one former Fed governor, the other one is a current Fed governor. And then we have a market practitioner from, I believe it was was it BlackRock or somewhere, right? So
Yeah, BlackRock.
all these candidates, except for Kevin Hassett, the other three seem to be a bit more reasonable. They probably would not go crazy,
Mm,
especially the guy from the market. I'm sure he's aware, what the consequences are if you are too aggressive, if you go crazy on rate cuts. So it seems that market is still quite comfortable at this point looking at the candidates, because Kevin Hassett probability has gone down significantly, unlike earlier, late last year, right? Kevin
yeah.
Hassett's the National Economic Council, the chair. So then I think right now the market seems to be a bit comfortable in that sense, because the candidates a bit look quite reasonable.
So here's my question. At the end of the day, if in any slight chance
Hmm.
the Fed loses independence, is that a
Hmm.
good thing or a bad thing?
I would think that if you want to think about independence, right, I would refer you to the recent development in Indonesia.
Mm,
Okay, look at
yeah.
Indonesia today, suspended again, right?
Yeah. Limit
Panic
down,
stock.
right?
Yeah, limit
Yeah.
down. Yesterday, limit down. And currency basically at historic low, record low, even worse than 1998. What happened? In one thing, investor confidence. Why is that investor confidence an issue? What are they worried about? Of course, the new president, the policy is a bit different from the previous one. Maybe in terms of fiscal discipline, investors don't see it favorably. Then another
Mm,
thing was, of course, finance minister was changed from a familiar name, Mulyani. Everyone was familiar with her. She was seen to be a professional. Was changed to somebody that I think investor may not be too comfortable with. And of course, central bank, the president appointed his, I think, nephew or cousin to be
mm,
the deputy governor. So I think investors look at these things, they don't really agree. They don't really like it
yeah.
in some sense. So all these factors put together, that would, I think, cause a lot of problems in terms of confidence. Right, so I would refer you to that if you want to see an example. And if the Fed
Yeah.
were to lose its independence, that will be even more, I think, more dire consequences. So
When a central
Trump,
bank decision becomes too political and
right?
not market-based or data-based, at least the current Fed is still very much data-focused.
Oh, definitely. I mean,
Yeah.
that's the reason why there's still credibility and confidence. Although we talk about de-dollarization, again, it's a
Yeah.
long process. It is not the central bank's doing,
Yeah.
but rather other factors, right? So the central bank is still seen to be credible and trusted. So if so, President Trump would have to be very careful in appointing the next chairman. But anyway, he has the appointee has to clear through Congress, and it is not an easy task at this point of getting through the candidate.
The confirmation by the Congress. Yes, I
Yeah,
think
that's
after
right.
the Powell investigation, I think
Yes.
a bunch of Democrats expressed concern and
Yes.
whether they will conform to President
Right.
Trump's choice. Okay, I want to ask you about China, but I also want to leave some time for the audience to ask you any questions. So
Right.
please,
Sure.
anyone who's online have any questions for me and Teck Kin on macro, de-dollarization, the Fed, all the topics we covered so far, please use the Q&A window to enter your question, and we will answer them as much as we can. So when we queue up a question, maybe a 5-minute quick take on China. Are you
Right.
bullish?
Sure.
Are you optimistic? Pessimistic?
Okay. I'm not pessimistic.
Okay.
I'm not pessimistic.
Neither are we. Yes.
Yeah. So I'm not pessimistic about it. We are still. I'm not overly optimistic, right? Obviously, like what you mentioned, Wang Qi, a lot of problems, a lot of issues, particularly the property sector is one of the drag factors. Very big drag factors to spending and other confidence issues and all those things. But it's not a killer. It's not a killer, right? It's not a fatal factor that the whole thing is going to go down, burning. So there are some positive factors. I want to highlight one of those is the foreign trade, foreign activity, export activity has been doing very well in China. Okay, AI spending is one of them, of course.
Sure.
But the other one is that China is a very important part of the global supply chain. So companies are producing things that are important, are needed in the supply chain, whether it's at the middle, at the end of the supply chain, consumer part, or at the front part, or the upstream, downstream, whatever. So China is still an important factor and is playing its part. And take a look at 2025 exports went up by about 5.5%. We are talking about huge US tariff overhanging. And it's about the same as 2024. The pace, you would think that it has already gone up so much, must come down a bit, but no, it's actually has about the same as 25. So why is that the case? Because the look at this, where the Chinese export go to, the US going to the US directly. Look at all the declines every month, every single month for the past 8 months or something is double digit. But we want to look at the positive side. You look at all these double digit to different places: India, Thailand, Vietnam, Italy, all these places are buying Chinese stuff, whether as part of the supply chain or end products or whatever, right? So as a result, you saw this sort of number, right? Scary number, trade surplus, close to 1.2 trillion, record high despite Trump tariff. And it's even higher than
people use that
Trump
number to
1.0.
show that China has won the trade war.
Yeah, in a sense, yes, it has done very well. You can hit me left, right, center, but I can still survive. And in fact, I'm doing very well. Thank you very much.
Yes.
Right. So it's already 1.2 trillion US dollars. So much better. So it has a problem. China has a problem. What are we going to do with all these dollars that you're collecting? What are you going to do? Right. So by gold or one of that.
The outlook for 2026
Okay.
for China, the economy, I mean, what we saw is towards the end of 2025, a continuing slowdown in real estate. And by the way, consumption, retail sales was down. December, I think, was below 1%. I've never seen such a low number. So despite the strong exports to other countries, what's going to drive the Chinese economy in 2026?
Take a look at the makeup, Wang Qi. Take a look at the makeup of Chinese 5% growth. Where are the contributions? Who were contributing to it? So you can look at the retail sales down so much, but you are talking about the incremental. The base is so much higher, so much bigger. So the driving force of Chinese activity is still consumption expenditure. Half of it came from spending. Yes, spending has slowed, but it's still a huge part of it. Amazing part, huge part. Of course, the other contributing factor is export. The net export is so much contribution from it, all right? And investment doing its part. If you look at previous years, it's not always the same, the picture. Take a look at 2023, exports was a drag, right? And it's not a big part as in the past, in certain years. So if you take a look at these 2 years, seems to be okay. And I would venture to say that coming into coming into 2026, I don't have the charts here, but coming into 2026, I think spending will still be contributing to it, and exports could be contributing to it. Maybe not as much as what we saw in 2025, but it's still we should not ignore that factor.
Yeah.
Right. Even though it can be like negative or whatever, but it's the huge part of that makeup of the entire of country of the system.
So China will be fine in 2026.
It should be fine.
Economy-wise,
Some
yeah.
moderation, 4.7% growth we are expecting from 5% in 2025. So some slowing down, we should expect that because you're not going to continue with that kind of momentum, right? But again, it's not fatal that we should throw in our towel and go away, right? So that means companies will still be making money, selective companies, if they have the market, if they have products that people want, they can still be making money. And foreign investors are coming back in. If you look at all these Europeans knocking on the doors of of China, right? So China
because
was
partly because of Trump's policy.
Yes.
And partly because of the competitiveness of Chinese exports, as you mentioned.
Exactly. So Trump is pushing everybody to China's labs now.
Yeah. Okay.
So
anyone any question, please?
Yeah.
Please use the window to. I do not see any questions so far. Anyone has any questions? Please use the window to enter them. Use the Q&A window. Nothing, right?
Yeah. So far, maybe I will just have one more point to make about Trump policy, America first, right? So if you look at what Trump has done to Venezuela and now moving targets to Greenland and also Iran. So if you look at Venezuela, what does it have, right? We all know that world's largest reserve here, 300 over billion barrels. This is the world's #1 reserve in Venezuela.
Yeah.
Just have to invest a lot more money to extract it, even larger than Saudi Arabia. And Iran is #3. Largest reserve. And look at US, 45 billion barrels reserve. So it is almost like a fraction, maybe about 60% or 50% or something like that, right? Of the others, 30%. Now, if you look at the extraction speed, Venezuela is only 0.9 million barrels a day. Iran 2.9. Iran is already quite fast, right? But if you look at US, look at the extraction value, the output, you are depleting fast of the limited reserve that you have. So from Trump's mind is this, it's actually a resource grab, right? So while the dollar still has some value, I better exchange it to real resources. So that's what is happening right now. You're grabbing all the real resources, and investors are also responding. Right? Gold, silver, plus other real assets. And that's what I have here. Right?
Copper,
copper, whatever real resources that people can get their hands on, even land. You look at Greenland and all those other things. Basically, one of the things, of course, is land and the minerals on the island.
Yeah, these real resources are also beneficiary of de-dollarization. Definitely.
Yeah, that's right. So people are thinking,
and some of them are driven by strong AI-related demand like copper. Okay, we do have a question on the pending Supreme Court ruling on Trump's tariffs, which was expected earlier this year. I think we missed 2 rounds of announcements. Nothing has been announced so far. What's your view on it?
Okay, so
market?
Right. So Trump has already said, and Besson said that as well. If or even the trade rep, if the Trump Supreme Court strike it down, they would have other tools available, and all those Super 301 or whatever sections that they use. Of course, it's not as convenient as IEEPA because it's an emergency power. So under emergency power, Trump can do a lot of things, very flexible. No need to investigate, no need reports, just apply. Whereas all these other trade tariffs, you need to have justification, so to speak. So it will take a bit of time, but I think we will. Trump would have the government would use it if IEEPA is not allowed, right? So we are going to back to the same old thing, just in another name in terms of tariff. So it's not going to be easy for companies, but that means the tariff will still be with us for a little while.
Yeah. So I think you're right on. I think the market is trading as if, even if the Supreme Court rule out the tariffs, Trump will still have many other ways to put it back on.
Yep. Absolutely.
But then I think there's a bit of a contradiction here is really, so far the market is trading as if tariffs are good, but there's still a risk that tariffs may still have a negative impact on the U.S. economy, even though Teck Kin shared earlier that the companies are adjusting to offset that effect. I think, whether right now it's not so obvious how the market will respond if the tariffs they're here to stay or not. But I think that the conclusion on the fixed income market is pretty clear, because tariffs now are bringing in about 30 or 20 to $30 billion a month in terms of the U.S. federal government revenue. So certainly if the tariffs are outruled, that's not good for the U.S. credit, the U.S. government debt situation. Would you agree?
Well, the government, the tariff revenue roughly is about 200 billion, like what you say, about 20-30 billion a month. So it's about 200 billion in 2025.
Yeah.
So in some way, it can relieve a bit of a pressure on the fiscal position in some way, right?
Yes.
However, I mean, if you are disciplined, right? If the government is disciplined, that would help. Unfortunately, the US is not, because Trump is saying, oh, let's increase our defense spending from 1 to 1.5 trillion. That means additional 500 billion. And you are only getting additional 200 revenue, but you are spending 500 and you still have a gap.
Yeah.
Right. So that's where the problem is. So tariff by itself should be able to help to correct some of the fiscal issues and all those things. But the US is not, I mean, the US government is not known to be frugal or disciplined in this case here.
Yeah.
You're increasing your spending, so the gap cannot be closed. So that will be negative on the US treasury
yield.
In a sense,
Definitely.
right? Because you got to issue more. So that's where the problem is.
I see a number of questions on gold and silver. In fact, those are really good questions. We actually missed on that. We talk about the safe haven assets, and gold should be one of them.
Yeah, gold is one of them.
Gold, one of them. Let me talk about my view first, and then technically you can share your view.
Sure.
For my view on gold, please go back to my previous CIO series. In fact, we'll be talking and written extensively on my view on gold. We don't have a price target. We don't have a price ceiling on gold. I think there are two events that we need to watch for potential top on gold. Again, please down to my CIO series number 30, the one previous one. It's available on YouTube to monitor when or how gold will top out. So far, not yet. Okay, so far, not yet. And then silver obviously is more volatile, but it follows roughly the same logic as gold. Having said that, there's no top for gold and silver. We do have some technical levels for you to consider when these things go through some kind of a technical correction. The technical correction is always possible with all assets. No assets can go up forever. But these technical corrections doesn't mean the fundamental trends are over. We're still very long-term bullish on gold. And so on gold, we can constantly update these technical levels. I think one of them is 3,900, used to be 3,700. Obviously, with gold now at over 5,000, it's we need to update those technical support and resistance levels. Other than that, it's easy to say that I think gold will continue to go up despite all these minor corrections on the way. Any view on that? Do you have a price target?
Yes, we do have one.
Okay.
Or rather, we did have one.
Reached, right?
It's already.
Might as well not having one.
Yeah, that's right.
Suggestion.
But we have Wang Qi, we have monthly publication we discussed earlier, and every month we refresh this. The last time we refreshed was on around 9th of Jan. Gold was 4,400. We are saying, okay, by end of the year it should be 5,000. Of course, little did we know, now we already breached $5,500 already, right? So we are having an issue, or rather we are scratching our head what should be the next target, right? We are coming up next week with our new prices for all these, the table that we have. So we'll see. We'll have to put our heads together and pull some number out the air on this one.
Yes. Good
So
point. We
like
should
what I say, it's
constantly
really
update these.
crazy. Yeah, it's
Really
really
crazy. I mean,
crazy.
so think about it. It's only we haven't even completed 1 month into
Yes,
2026, and all
that's
these
right.
things are happening.
Yes, all broken. But I want to also mention, you just talk about technical levels. If you remember, gold at last year when it broke 4,000, then there was a huge correction.
Mm.
Remember? I think late
Yes.
last year it broke 4,000 because it's really
It went
psychological.
down
People,
to 38 or 39.
something
Yes,
like that.
yes.
Yeah, I always tell people this story. You know, in
Yes.
Singapore, UOB, I think we are the only bank that have a counter that will sell physical
Gold
gold.
business. Yes.
Yeah, physical gold. You can have kilo bar,
Yeah.
500 gram, whatever, coins, whatnot. And
Yeah.
when the thing broke 4,000, what I saw, I never seen before. I've been with the bank for 20 years, close to 20 years. I've never seen before, which is people lining up at the gold counter and the line spill over outside the building. I've never seen
I
that
remember
before.
that. Yeah, I think I
You're
was in
right.
Singapore that week.
You were in Singapore.
Yes.
I was just wondering what is everybody doing? What is everybody doing? Because people cannot get over the fact that it can crack 4,000 so fast.
Yeah.
People all jumping, and of course, after that there was a correction.
So that's
But
a
now,
leading indicator. Yeah,
right?
how famished people get about buying physical gold and the retail mentality about chasing
Right.
the momentum. Okay, I think we are running out of time, but I do want to squeeze in one more question. I think this is a great question about, and we're going to wrap up really quickly about Singapore government buying more U.S. Treasury. We are seeing the same thing with all the developed countries, despite de-dollarization, buying more U.S. Treasury, not less, except for China, except for maybe Poland. There are a bunch of other countries that are divesting away from the U.S. dollar, but it's not the major developed countries. So what's your view on that? Does it really conflict with our de-dollarization view?
No, it does not, because short term, even for the medium term, dollar will be here to stay.
Yes.
Now, if dollar is here to stay for the next 5-10 years, what are you going to do with your dollars? You have to put it to use, right? I mean, for individuals, for companies or asset managers, they can buy stocks. But for governments, central banks particularly, cannot really buy stocks, right? So what they do is that they have to put back into something that can generate return for them until it is not tenable anymore. And we are far from that, not tenable anymore. It's far from it. We are far from it.
Yeah.
Right. So
maybe that, of course, these countries are buying more U.S. Treasury. Maybe they're buying other assets faster also. They're just generally buying. Yeah.
Correct. So real assets, one of them. Yeah.
Real assets. Again, I think that probably is going to be a big theme as well in 2026.
Right.
Thank you again, Teck Kin.
All right.
We're
Thank
at
you.
the hour. Really interesting conversation. Very helpful, very insightful. I want to wish everyone a call a happy 2026 and early happy Chinese New Year. Thanks for joining us. And the replay of this call will be available on our YouTube Wealth Vision channel. Thanks again, and we will talk again soon.
Yep. 恭喜發財. Bye-bye.